All right. Welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. In this show, we talk about what's happening in these crazy markets and how we're trading them. Today is Wednesday, May 29th. There's Chip, my trading buddy behind me. Stocks tumble, yields are higher for the second day straight. Airlines hammered after American Airlines cuts outlook. COP agrees to buy MRO for 17 billion. Jamie Dimon talks retirement again, plus two stocks I was looking at today and more WTF signals. As you can see, there's a lot to talk about, so let's go ahead and get started. If this is your first time here, my name is Mark Hodge, and I'm head coach at Rockwell Trading. Let's look at the charts. And let's first take a look at the S&P 500 here. There we go. S&P down today, finishing slightly positive yesterday, barely higher, up just over 1 point, which is nothing for the S&P. This morning, though, opening lower. Right now, down 0.5%. We can look at a 5-minute chart and see how this looks. We actually opened and dropped and then found some short-term support here, maybe around 52.63. Then came back, got back to the open of the session, barely attempted a gap fill. It's definitely some room to move for that to actually take place. Now, trading right around where we began the day. So the S&P down 0.5%, the Dow taking the hardest hit here, down almost 1%, and the NASDAQ down 0.3% for the day. Also opening much lower here, but making a much more impressive comeback here with this attempted gap fill. So stocks are in the red, and there's definitely a little bit of a shift in sentiment here. Even the VIX was spiking. Look at this. The VIX jumping up 8% here based on where we were at yesterday. And after being at these super, super low levels around 12, the VIX now trading around 14, which is the highest that we've had. Well, this pop above this high was the highest that we've had pretty much since the beginning of May. So nice little spike in volatility here as traders try to figure out what comes next. Yields higher for the second day straight. Look at the 10-year yield. And it's interesting here because we're seeing that there's a big spike in the 10-year yield and the 2-year yield is being held back right now. So we've had this inverted yield curve for a while now, but in a normal market environment, a stable market, you would expect long-term yields to actually be higher than short-term yields, right? And this is where the 2-year yield is at 4.97, the 5-year yield's at 4.62, and the 10-year yield's at 4.61. Now, the 10-year has been flip-flopping with the 5-year for a little bit, but it's been inverted with the 2-year yield for a long time, with investors believing that short-term rates are going to be higher and maybe things might be lower in the future. So this time we get a bit of an opposite reaction where the 2-year yield is actually negative and the 10-year is up 1.3%. Again, trying to catch up to be more of a normal type yield environment. Let's go to PowerX Optimizer and just see what's going on with the heat map. Where are these losses distributed? Let's look at the S&P 500. And you see that it's pretty much across the board, right? A lot of red here. Amazon's up 0.7%. Apple's up over 1%. NVIDIA up 0.4%, although flip-flop and going negative for the session. Microsoft flat. Meta down 0.2%. Google flat. So some of the big names not moving a whole lot, but a lot of red everywhere else. Oil and gas is down. Basic materials, utilities, industrials, everything seems to be down right now. Financial services, and not a whole lot of green. Let's look at some individual market movers, and let's look at American Airlines to kick this off. There we go. AAL is the ticker. Look at this, down 15% here. American Airlines dropping after they slashed their second quarter outlook. Some concerns there about what is expected in the second quarter. And we see that this profit view had at least one analyst cutting or downgrading the stock. And we see that revenues are challenging right now. They're expected to persist into the summer. This actually trickling in over to other airlines as well. So a sympathy move lower. We see Love Southwest is down 5.4%. We could look at Alaska. Alaska's down 3.3%. We could look at United Airlines. United down 1.3%. Although hanging in there, not as bad. We could look at Delta. Delta down 2.1%. So airlines taking a little bit of a hit after the commentary from American Airlines and their announcement that they're slashing their sales outlook. Now, in oil and gas, there's some big news. We could look at ConocoPhillips. ConocoPhillips down 3.2%, but this comes after an announcement that ConocoPhillips has agreed to buy Marathon Oil in an all-stock transaction worth about $17 billion. And this will add 2 billion barrels of resources to ConocoPhillips inventory. So this is a big move for ConocoPhillips. And what you typically see is the company doing the buying, whether it's a cash transaction, stock transaction, or a bit of a mix here. The company actually making the acquisition drops because they're giving up resources to take on new, another company. And if we look at MRO, typically the company that's getting bought is on the run and jumping. And that's the case here. MRO up 9.2% here on that news. So big deal for both companies. And it's totally, it's not expected or it's not expected. It is expected. And it's no big deal that COP is down for the day because of the news. Another mover here. Let's look at Dick's Sporting Goods. Look at this. Dick's higher at 17%. Now, they have reported some great earnings here. So, better than expected earnings. They also had better than expected revenue beat. So, jumping up to highs that we haven't seen ever. So nice move for DKS, and looks like we're making all-time highs there. Now we can take a peek at JPM here, JPMorgan, because I did see that there's more retirement discussion. Jamie Dimon was asked about his retirement. This took place at Bernstein's Strategic Decision Conference on Wednesday. He said the timetable is less than 5 years, and that could be 4, be 3, be 3.5, 4.5. It could be 2.5. It's up to the board. But he said the board will decide. We've got some great succession. You will know them all. So you should evaluate that yourself. So a little bit cryptic when that date might come. And of course, it's up to the board, but definitely using that 5-year window and now claiming that it's going to be sooner rather than later. Not a big move with JPMorgan here. I did a little to affect the stock because we know that banks are down a little bit today, and this is essentially in line with the overall market there. Let's take a look at some new trades here, and let's first look at the wheel. I'm going to share two stocks I was looking at. I've not pulled the trigger, but SWKS caught my attention here. So SWKS, right now, the 89 strikes available. If you are looking at this Friday's expiration, the premium would give you 40% annualized. The June 7th expiration, the premium would give you 36% annualized. This is one that I think is decent. We see a 3% div yield. So if you do end up holding it a little bit longer, at least it's paying a dividend. PE ratio below 20, below the S&P average, which is around 25. So the PE ratio, decent. especially for technology. We see that annually we have 5 years of net profit, quarterly 5 quarters available, or of net profit, that is, and some decent premium. So this was one that caught my eye. I like the ranges that it has. Uh, Maybe a little bit lower would be perfect, but we've had this real nice range here going back to the lows that we had in 2022. I thought it was a decent one. I've traded it before, made a little money on it, and this one caught my eye. Another one that caught my eye, we already talked about it, ConocoPhillips, COP. This one we know is down today because of the acquisition of MRO, and that would not be a surprise here. We see that ConocoPhillips has had a pretty nice run since 2022, but we have these nice ranges here. So found some support around 92, a little bit of a dip down to 82, then rallied, pulling back to these levels, finding some support around 95, maybe some support around 100. And then with this recent move, maybe some support between 107 and 114. Right now, the 114 is available with this move lower today. I was seeing if maybe there's an opportunity to sell puts a little bit lower here rather than at 114. Definitely something that caught my attention. If we look at WTF trades, there were three exits. So Chevron CVX was an exit today at the open. This one was a small win based on the entry signal. So we got in around 158.08, and with today's open, the open was 158.02. But I do know that I had a small win on this one. I think I might have had a better fill on the exit rather than right at 158.02. Or if that wasn't the case, then I had slightly better fill on the entry. But either way, small win for me. Disney also an exit. A little unfortunate that we had the market dip on these exits, because if we were seeing another positive day, it would have been pretty nice. But here we had a small loss on this one. So 103.04 was the entry, 101.76 the open and exit today. I got out at 101.78. And then we also have Dow, which was basically a scratch trade. The entry 57.29, and today the exit was 57.50. At least that was the open, and it's all right. It's all right. A little unfortunate that the overall market. I mean, pre-market, I think we were down 0.9%, almost a percent. So definitely some weakness going into the open. Three exits. No harm done with these exits, although not some big gains like we had hoped for, but that's part of trading. With today and the signals available, CL was a new WTF trade. Merck was a new WTF trade. Pepsi was a new WTF trade, and PG, a new WTF trade. Also, Schwab, another WTF trade. I took CL, Merck, and Schwab. Schwab right now trading higher, so a win so far after the gap down. 69.90 was the open of the day. Right now, 70.31. And Merck and CL are down a little bit below the open and where I got filled, but not too bad here. So just pulling back a little bit more. So three new entries for me to replace the three that I got out, and we'll see how they go. Let's take a look at the economic calendar and just see what's in store for us tomorrow. Preliminary GDP pre-market an hour before U.S. markets open. Also, unemployment claims. We see these are both red flag reports, but the real biggie, as we've already mentioned, is Friday's core PCE released an hour before U.S. markets open. So this is going to be the biggie. Sure, there could be some movement if there's something that comes out a little unexpected here with these red flag reports tomorrow, but all eyes are on Friday. We could also take a look at the earnings calendar, and we know that right now it's retail, and we had Dick's reporting great earnings and some nice movement there. Today after the bell, Salesforce, HP, U-Haul, a few others. U-Haul's not a big company, but it was showing there. And then tomorrow before the bell, we have Dollar General, Hormel, Best Buy. After the bell on Thursday, Costco, Dell, Marvel Technology, and a few others. So Couple of retail reports this week, and Friday's big core PCE number. Definitely something to watch. Now, I know it's Wednesday, but I'm going to be in Iceland tomorrow and Friday. And Saturday, I'm making my way over to Barcelona, where I will spend 2 weeks with our mastermind members who are traveling to Barcelona to enjoy the fine country food, drinks, and a little bit of trading. So, looking forward to that. We will let everybody know what our coffee with Marcus and Mark schedule looks like over the next 2 weeks. But with the travel, Marcus is already in Iceland, and it's a little bit tricky with the travel to do some of these videos. So, we will not be having a video tomorrow or Friday. So, have a great rest of your week. We'll be doing some live coffee with Marcus and Marks from Barcelona over the next 2 weeks. Looking forward to that. If you like this video, please give it a thumbs up. If you're new to the channel, please subscribe or share with other people who might be interested in how we trade these crazy markets. Until next time, happy trading, everybody.